Welcome back to this week's market update. Today is Monday, December 16th, 2024, and we will jump right in. Jumping right into last week's market performance, we saw stocks kind of mix as the CPI and PPI came in warmer for the month of November. We saw the Nasdaq Composite up almost 1% on the week, the S&P 500 just about flat on the week, with the Dow Jones Industrial Average down about 1.3%. And then last but not least, in the bond market, the Barclays Aggregate Bond Index down 1.1% as of last week. Heading right into the week of data, as I said, we had a lot of inflationary data last week, with most of it coming in a bit warmer than the last few months of data. We had the headline CPI come in at 2.7%, and this was an increase of 0.3% in the month of November. Then core CPI a little bit hotter at 3.3%, and also a monthly increase of 0.3%. So within this month of inflationary data, we had some notable moves. We saw things like food, that was up 0.5% in just the month of November, up 1.6% from a year ago, but this is really a pretty hefty monthly jump in food prices and grocery prices there. We also saw things like energy commodities also up 0.5%. Now they are still down from a year ago largely, although this definitely contributed to this hotter monthly inflationary number. But then other categories like new vehicles, we also saw those down from a year ago. Used vehicles also down from a year ago, but up from a month ago pretty significantly, although these are pretty volatile categories here. And then last but not least, shelter, that was up a pretty steady 0.3%, generally where it's been in the months prior, with an annual inflation rate of 4.7%. So definitely something the Fed is going to take a look at their meeting this week. But with that, we'll jump right into producer prices. Along with the CPI, we also had the PPI, the Producer Price Index, came in a little bit hotter than expected at an annual rate of 3% on that headline number and 3.5% on that core number there. We saw a lot of that came down to goods inflation, which was up nearly 1%, 0.7% in the month, compared to services, which were up just 0.2% in the month. Within final demand goods here, you can see the price of food to producers was up 3.1% in the month of November. So that's quite a hefty jump in just 1 month for food costs. And that was largely due to a surge in chicken egg prices, up nearly 54% from a year ago. It made up a quarter of this monthly increase here. So a quarter of the goods inflation that we saw in November for producers, that came down to just inflation in chicken eggs, a lot of that due to some avian flu issues affecting supply. Ultimately, though, this is another data point that the Fed will be looking at this week in their meeting as they assess their summary of economic projections, as well as make their decision for a rate cut or not. So currently the expectations are pretty heavily leaning towards a rate cut this Wednesday, but it could go either way. There's still a chance that the Fed could change their mind and decide to pause and give it another meeting or two before they cut rates again. A more positive indicator here, the Employment Trends Index, it rose to 109.55 in the month of November, up from an upwardly revised 108.25 in October. This was the first time in 2024 that the ETI has posted consecutive monthly gains. You can see we were in quite a bit of a downtrend. A few months of positive data here, reflecting rising optimism among both job seekers and businesses. The share of consumers reporting that jobs are hard to get fell for the second month, dropping to 15.2% in November, which was a little bit lower than October's 17.6%. We also saw that the share of firms stating that jobs were not able to be filled right now has increased for 2 straight months. That's a good sign that the demand for jobs, that's a good sign that the demand from employers is improving in recent months here. Other signs of labor market strength include a 4-month decline in the share of involuntary part-time workers, as well as a reduction in initial unemployment claims in November. So overall, we are seeing a pretty steady employment market. It is definitely cooling from those pandemic highs, but seems to be more in normalization state, a very stable state for now, with the unemployment rate still in the low 4%. So overall, positive indicator for the economy. As 2024 comes to a close in the next few weeks, we just want to take a quick look at our recession indicators. Where are they and what might 2025 have ahead for us? Right now, the outlook is pretty uncertain. So it looks pretty neutral overall. I would say mixed. We have 4 bearish indicators, we have 3 bullish indicators, and then 1 neutral here. So looking at these, we had the ADS, that's been bearish for just a few weeks now. The ISM Manufacturing Index, that's been bearish for quite a while the ISM Services Index has been bullish for quite a while. Leading indicators, these have also been bearish for quite a while, although we haven't seen the actual softening of the labor market, GDP decline that this indicator would suggest here. The Business Outlook Survey, this has been neutral. The Employment Trends Index that we just took a look at, that's bullish, showing a little bit of normalization, although overall bullish and a pretty stable labor market right now. Chicago Fed's National Activity Index, that is bearish. And then last but not least, the Quarterly Anxious Index, which is a survey of professional forecasters' chances of real GDP declining, aka a recession. That is pretty bullish. Not a lot of forecasters are projecting a recession in the next few quarters. So overall, a pretty mixed, I would say slightly positive outlook for 2025, just looking at these indicators here, but really a lot of uncertainty, and the Fed will continue to be a main driver of our economic outlook. So with that, we thank you very much for tuning in to this week's market update, and we look forward to providing another update to you very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors, and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.